Our next guest is a financial advisor from Bloom Advisors, and you'll also find his Money Matters column for Hometown Life newspapers online at hometownlife.com. Rick Bloom is back with us once again on the MegaCast. Rick, thank you for being with us today.
Thanks so much for having me, Tyler. I appreciate it.
Appreciate having you on. So we are just approaching the end of the month of February, which means we're getting that much closer. We're about halfway through the year to the point where our taxes, both federal and statewide, are due. And of course, some people will go at their taxes on their own. They'll file them themselves. Some will use will use a CPA. Others will use online tax services such as and there's a number of them. There's H&R Block. There's TurboTax. Those are kind of the more common ones. But what they may not be aware of is that there is a free option through the IRS as well, the IRS Free File program. Can you tell us a little bit about this program and what ways it can help people as they're filing their taxes?
Sure, and this really is a great program. Many people would say, wait a minute, I don't want the IRS doing my taxes because they'll take everything against me, but that's not what happens. This is a consortium of companies that work with the IRS together to start this program. So what you're actually doing is tapping into the software of some of these companies. Same software that you could pay for if you go through the IRS's program, you could do it for free. And so it's a very good program, and lots of people should take advantage of it. So what the requirements are, and the requirements are a little different for each of the companies that participate, but basically if you make $73,000 or less, if that's your income or less than that, you're going to qualify for at least one of these programs to be able to do your tax return for free. And you link directly through the IRS's website. You go to the irs.gov, click on their free file program, and you'll see all the programs that you can take advantage of. And the nice thing is some of the programs will also allow you to do your state return for free. So it's a great way, and the great majority of people in this country qualify for this program. They just don't know about it. And so if you're computer literate, you understand things on the computer, and you have relatively straightforward tax situations, W-2s, maybe some 1099s, definitely you should look at this program. It'll save you money, because nothing worse than having to do your taxes and then pay someone $400 or $500 to do it. Here you can do it for free, and you get just as good a result as if you paid someone.
And so, Rick, as people are approaching either filing their taxes or getting their documents together, there's a lot more to consider this year than there has been in previous years because of so many different tax credits that were provided because of the pandemic, certainly because of federal stimulus checks. What are some of those considerations that people need to be very aware of and be on top of as they're preparing their documents for filing taxes and as they actually go to file with the IRS and with the state?
Well, particularly this year, for those people who received a child tax credit, and they started paying those in July, and they're actually for your return, they were prepaying your credit to you. Well, you got a letter, and I believe it was Form 6419. And it is so important that you keep that form and for tax purposes, because that's going to spell out how much of a credit you've already received and how much of a credit you're entitled to. So to me, that's one of the most important things. But I would tell everyone, if you get a tax document, whether it's a K-1, a 1099, you need to save those documents for tax purposes. It's better to save more than to save less. And everyone's going to, that has, let's say, a bank account's going to get a 1099. If you want to reduce your audit risk, make sure you file accurate tax returns. And that means don't forget one of those 1099s, because they will catch you and it will lead to additional scrutiny.
We're joined by Rick Bloom, financial advisor at Bloom Advisors, joining us on the MegaCast. You can also read his Money Matters column at Hometown Life newspapers by visiting hometownlife.com. And so as people are also considering the ways that they're filing their taxes this year, of course, people are trying to take as many deductions as they can possibly take, although, of course, doing so legally. There are some that always will tend to fall through the cracks, though? What are some of those potential claims that people can make that may fall through the cracks, but also save them money as they're preparing their taxes?
And this is one for sure. First of all, because of the tax law change a couple of years ago, most people no longer itemize their deductions. They take the standard deduction, which is generally better for them. However, if you're charitable in nature and you make charitable contributions, if you don't itemize your deductions, in the past you didn't get a deduction. That's not true for this year. So this year, if you're married, you can take $600 as a deduction for charitable contributions, even if you take the standard deduction. And for a single person, that is $300. And so that is something that people forget about all the time because they say, I'm not itemizing my deductions, so therefore I can't take a charitable contribution. Well, you can, as long as it's a cash contribution. Make sure you save your receipt. It makes things easier. Now, on the downside is last year, we had an exemption of over $10,000 for unemployment income. Unfortunately, that was a one-time hit. So this year, you do have to pay tax on your unemployment benefits, where last year most people didn't. This year, they have to. And also, just as a reminder, if you're an employee and you've been working at home, most likely, in the great majority of cases, you're no longer allowed to take a home office deduction. Now, if you have your own business and you're working at home, that's a little different if you're self-employed. But if you're an employee, it's nearly impossible to take a home office deduction these days, and most people shouldn't even, go that route.
We're joined by Rick Bloom, financial advisor at Bloom Advisors, joining us on the MegaCast. He's also a columnist at Hometown Life newspapers. You can learn more information about his Money Matters column by visiting hometownlife.com. And in those columns, you often will take questions from your readers. You recently had a question from a reader that you had a pretty quick answer to about filing taxes, asking, why do you actually need to file a tax return? They take taxes out of my paycheck for the state level. They take taxes out of my paycheck at the federal level. They know how much money I'm making. They know how much I owe. Why don't they just send me the bill? Why do I have to file taxes? And you had a pretty quick answer about what happens if you don't.
We're all citizens of this great country, and we have obligations as being citizens. And one of those obligations is we have to file tax returns. If you don't file tax returns, it's going to cause you more problem down the road. Not only can there be substantial financial penalties, but there's been numerous people that have gone to jail for not filing their taxes. And, it's funny, every year at this time you hear someone says, well, constitutionally, you don't have to file taxes. And if you put this on your return, they can't tax you. All that stuff is bunk. It is totally useless. And you can't fall for that, because one thing people have to realize, Tyler, is that you and I are responsible for our own tax return. So if there's mistakes on our tax return, ultimately we signed it, we're responsible. So, people that think you can do these gimmicks and, say the Constitution, don't fall for it, because you always see tax protesters end up in jail. In fact, I had a funny story for you. This is about 20 years ago. There was a guy who wrote a book about you don't have to pay taxes. And he spelled it out the whole bit. And he says, he doesn't, the whole bit. Well, he got audited by the IRS. And he made a big deal about the IRS audited me and they couldn't get me on anything. Well, the long and short of the story is the reason why they didn't get him on everything, because he actually did file his tax returns and they were accurate. And his argument in court was, well, I didn't tell people that I didn't file my taxes. I said, I don't, do this. I told people they don't have to. And, they play these games. Don't fall for this. We have obligations as citizens. And I'll tell you this, Tyler, I don't know what gets people more less sleep at night than worrying that the IRS is going to come knocking. No one wants them come knocking at their door, sending them letters. You'll sleep better at night if you file fair, accurate tax returns.
And that's the thing too, and we've talked about this before also, they also don't want to be coming after you. They're not looking forward to auditing individuals or to auditing businesses and going through that process. It's a hassle for them as much to investigate people that are dodging taxes or that are misleading in their tax returns, as much as it is a hassle for people to navigate being audited by the IRS.
That's right. And, look at, you can do everything right and still be audited. That's the nature of our system. But you're going to increase your audit risk if you take phony deductions, if you don't report income, and those type of audits can be a lot different than other audits. And so it just makes sense to file your tax returns, do it accurately. And let me also add, a lot of people, because of life in general, they find they can't get their tax return done on time. Well, that's not a problem, because we have what are known as extensions, and you can get an automatic 120-day extension to file your return. And you fill out Form 4868, you send it in, it's automatic. However, and this is what confuses people, it's an extension of time to file your return, not to pay your taxes. So your taxes are still due. So for those people that are going to do an extension, you may have to guesstimate your tax liability and make an estimated payment. But filing extensions are not a problem, and they don't increase your audit risk. So if you're not going to be able to do your return on time, file an extension, but guesstimate your tax liability so you don't get hit with any penalties down the road.
We're joined by Rick Bloom, a financial advisor with Bloom Advisors, joining us on the MegaCast. Also, the author of a Money Matters column at Hometown Life newspapers. More information, hometownlife.com, to read his articles about taxes and other topics as well. Another subject you wrote about recently is prenuptial agreements. Who should be getting a prenuptial agreement, and what goes into a quality prenup?
Well, I think that people that get married later in life need to look at prenuptial agreements. Business owners need to look at prenuptial agreements. And also people that have accumulated assets, need to look at prenuptial agreements. And it used to be in the old days, it was always for second marriages, but that's not true anymore. It's also for first marriages. And people say to me all the time, well, Rick, we're getting married because of love. Why do we need this? Well, you need it because the reality of life, people get married out of love and then they fall out of love. And what a prenuptial agreement does is try to make the whole divorce process much easier, less legal fees involved, the whole bit. Now, one of the mistakes people make, Tyler, is they wait to do a prenuptial agreement till the day before the wedding. And then the one party, gives it to the other. And those aren't enforceable. Typically, each party should have their own attorney, and they should do it at least a couple months before the wedding so everyone has time to read the document, make changes, make adjustments. But they can make the divorce process much easier. And particularly if you're a small business owner, you don't want your business tied up in legal proceedings the whole bit. A prenuptial agreement can prevent that. So I am big fans. Now, if someone was getting married, they're 21, and they're just starting out, no. But when you see people, and we see it a lot of days, people getting married in their 40s and 50s, they're business owners, they have children from other marriages, they really need to consider a prenup agreement.
And Rick, lastly, we talk often when you're on this program about investing. You write often about investing. There are many common mistakes that you've listed and others have listed for those that are investing out in the market today and in the future. Those include not having a game plan, not understanding the risks, and not having a diversified portfolio. Can you touch on some of the risks of each of those mistakes, and what are ways people can navigate either around them, if not be able to avoid them, of course, altogether?
Well, when I talk about that you have to have a game plan, I compare it to going on vacation. When I go on a vacation, I don't pack first and then decide where I'm going. Usually I decide where I'm going, what I want to do, and then I pack accordingly. So one of the mistakes most people do is they start picking investments, but they have no idea why they're investing. So if you're investing for 6 months down the road, it's a total different investment than if you're talking about retirement 20 years down the road. And so I tell people, more important than focusing on your investments is to focus on your game plan. Because if you don't know why you're investing, you're going to make mistakes. So I always think it's the first step, goals and objectives. Know why you're investing. Understanding risk is so important because people automatically say, well, the stock market's risky. I'll go in the bank because it's conservative. Well, that's not the case because money in the bank can be very aggressive, particularly you take a young person, maybe someone in their 20s just starting off. If they invest their money in the bank and get their whopping 1% return, they're not keeping up with the increased cost of living. It won't make a big difference over any 1 year, but if you go 10, 20, 30 years down the road, that money has evaporated in value and your costs have risen. So understanding the different types of risk. Stock market has risk, markets go up and down, and we've seen it go down recently. However, people also have to look at purchasing power risk. Purchasing power risk is really an inflation risk. We all know that 10 years ago, things were cheaper than they are today. If your money doesn't keep up with the increased cost of living, you're falling behind. So investors, when they get excited about investing, the market's doing well, they want to invest in what's hot. That's not the way, that's gambling. What you do is you set your goals and objectives and you really look at risk. And one of the things that when you diversify your portfolio, you're having different risks in the portfolio. So not all your risk is the stock market risk. So you diversify. And within the stock market, large companies, small company, international companies spread risk out. And especially in today's world, investors have to be concerned with risk.
Rick, thank you very much for joining us. Before we let you go, any other lasting advice for our audience at this time that people should be keeping in mind on the tax front, on investing, or other subjects?
Well, we're going through a little trouble right now in the market. Higher inflation, of course, what Russia is doing. I would tell people, don't let that short-term discomfort affect your long-term game plan. I mean, some people, they automatically, whenever things get bad, they start bailing out. And that's a mistake. I'll go back 2 years ago, March 2020, when the pandemic really took force, stock market dropped. And the Dow was at around 13,000. People thought it was the end of the world. If they had patience, all of a sudden the market reached record highs again. So I think as investors, don't let short-term discomfort cause you long-term pain. Markets have, what you think happens in the market over the short run doesn't affect the long term. So I would tell investors, don't let fear dictate their investment decisions. Just like greed shouldn't, fear shouldn't dictate your investment decisions.
Rick, thank you very much for being with us.
Thanks for having me. It's always an honor to be here, Tyler.